Why aren't we seeing a rotation as equities continue to climb to records and this continuation of buy the dip on geopolitical tensions out of bonds more reinforced than we thought?
Well, we've been seeing this tug of war for some time. Since January, political risk has really gone up through the roof, but it's countered on the other side by the tremendous weight of the $4 trillion of bank reserves the Fed's laid out there during QE. And after they're finished with QE, the reserves are still going to be there. They will push through into loans, into deposits, into spending, and are already showing up in firming economy and firming inflation numbers. So I think the Fed long-term is going to win this story, but there will be periodic corrections as Russia, Pakistan, China, Syria loom in the news.
And you have these questions now about valuations. I guess it's nothing new, but Bob Shiller highlighting that, Nobel laureate who wrote on bubbles, says the stock market is expensive. At what point do you really have to start to worry about these stock market valuations?
It's expensive today for today's earnings. It's not expensive for the earnings that are implied by the stock of bank reserves. You know, the incremental earnings that come out of $1 of sales are about double the returns or the profit rates. And we're seeing firming pricing numbers and firming labor markets. That means finally we're going to get increasing sales numbers. And increasing sales numbers should be a big boost to the earnings over the next 2 years. But until those earnings show up, the PEs are going to look high.